The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 26th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start off with today's question. Why question? Well, folks, questions are absolutely what control our focus. Questions, from the moment you wake, there is a question. Most of us have a primary question. Some of us, you can imagine, when they wake, their primary question is, why did that alarm clock go off? Do I have to get up now? And, of course, there's others that don't wait for that alarm clock. They get up as soon as they can. Today's question, though, and I think a question, here's the thing. There's no question that questions control our focus out here. If you want a better life, doesn't matter how good your life is. The point is, if you want an even better life, your question maybe should be something like this. How am I going to live today in order to create the tomorrow that I'm committed to? I say, why live an ordinary life, folks, when you can live an extraordinary one? Let's go take a look at these extraordinary markets out here. Right now, we've got the Dow up 82 points, trading out at 14,529. S&P up 0.5%, up almost 8 points out at 1559 out there. NASDAQ up 11 points out at 3247. Russell's up 3 points, trading at 948.90. The NDX 100 is up 12 points, trading out at 2801. New York Stock Exchange up 33 points. We're going to take a look at all the indexes. The euro basically flat down one tick. Right now, the euro is struggling to hold its support levels out there. Gold back $7.90, relatively quiet, trading out at $15.96. Silver down 11 pennies, out at $28.70. Light sweet crude on its way up to the $96 range. Well, it's at $95.63 right now, so it can do that in a heartbeat. Our call number is 877-927-6648. Would love to hear from you. Give us a call. Let's go take a look at the S&P 500 first. Let's take a look at what it is that we've got out here in the S&P right now, trading up into a little area here of resistance. That resistance really being set up here by the session from March the 21st. I think that was Wednesday last week, Wednesday or Thursday of last week out there. That was a bearish engulfing bear sash candle. That set up resistance at the high of the prior session. That is March 20th. If we draw the line across the screen here, let's go take a look at it. You know, we had the S&P 500 trade up into that level yesterday. Let's go ahead and put this in red across the screen out there. So that is an area of resistance. We can see right now the S&P is trying to stretch up into that area. What the S&P has done here the last 4 out of 6 trading sessions, though, 1546.72. That is the number. You know that is the number of the low of October 11, 2007. That's the black horizontal line going across my screen. If you're listening in on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can always catch the live stream of this. That way you'll be able to see the charts streaming to you. Just go to the homepage of tfnn.com. Over on the right-hand side, you'll see a button that's got 3 little smartphone devices. Click on that. You'll get the show streaming live to you. You can also catch the archive of this. That way you can do a replay, take a look at the charts, maybe some patterns that we're looking at. And the archive of this show is on Channel 10. We can take a look at that 1546.72 number. That was tagged on March the 18th. Got down to 1545.13. Closed back above it. Rejected. Rejected that swing point low. Tried it again on March 19th. Closed back above it. Rejected the swing point low. March 21st, though, when that bearish engulfing showed up, we had to close just slightly below 1546.72. So there's a little bit of a crack in that ice out there. But then the the bulls trying to rescue it. Not a bullish candle per se on the 22nd out there. However, what it was a test of that low. Test of 1546. Low of that trading session was 1545.90. Certainly cleared that area. And yesterday's move down, got down to 1546.22, 50 cents below that 1546.72. So 4 out of 6 sessions rejecting that area. Why is that important? Well, what it does set up, it sets up that run to 1576.09 out there. That's 15 points north of where we are at. In order to get there, the euro is going to have to participate here, and we'll go check in on the euro, see what that is doing. But that's the S&P. It is rejecting this area. It's certainly signaling to us that it wants to at least go test that 1576 level. We'll see if today is a day where it breaks out. What would be a breakout? Well, a breakout above the most recent resistance level, most certainly now today, I would say, would be a close above, quite frankly, the high of March 20th, 1561.56, technically would do it. I would say you'd want to actually close above the swing point, or more preferably the high of yesterday, which is 1564.91. So any close above that, I think that sets up the likely outcome that what you'll see is a move to 1576.09 before you get your next piece of information. Regardless of the fact that the S&P is up here with light volume, on a daily, on a weekly, on a monthly, still doesn't matter if you get a close above 1576.09. Oh, that sets up the run to about the 1600 level. 1650 is eventually where the S&P wants to travel to, but we'll see if there's going to be any kind of reversal. There's plenty of divergence out in the marketplace, not tagging along with this move out here, but we got to take things one day at a time, one step at a time. Let's go take a look at the New York Stock Exchange. We'll go take a look at the daily chart of the New York Stock Exchange. It is right here. There we go, my bottom left. As we take a look at the bottom left out here, the New York Stock Exchange, what that also did yesterday was that tested this little gap down. So we now officially have 2 tests of that window. It is not repaired. The window or the gap down that I'm referring to is off of the March 15th low. The low out there was 90.91. The high of the next trading session was 90.86. So a small little gap out there that created an area of potential resistance. That resistance now has been tested twice. That was on March 20th. It gets up to 9,094, closes at 9,081, underneath the low of the March 15th session. Does it yesterday. Yesterday gets up in there, closes back below. Got a key reversal day as well on the New York Stock Exchange here, as well as most of the indexes out there. Today, not just an inside day thus far. Look for another signal here, which would be another test, a third test of at least 90.9105. That's low of March 15th, and it closed back below it to set up a very significant area of resistance out there. Remember, old resistance can become new support once you get a close above it. So that's on your New York Stock Exchange. Let's go take a look at the composite out there. Let's go see what the composite is doing here this morning. Let's put that stock chart up on the screen. The composite should be right in front of me. Here we go. So let's take a look at the composite. And on the composite, you can see the little 3 drive to a top pattern that our man Z and the Den pointed out yesterday. And that was a good call as we take a look at this 3 drive to a top pattern here. This one is a beauty. Now, it doesn't really have the Fibonacci numbers. You like to see the Fibonacci numbers going along with it, but sometimes you just got to take what it is that the market, well, not sometimes, all the time, you have to take what it is that the market gives you. Good, bad, or indifferent. Just use good money management and you'll be okay. As we take a look at this, ideally, we would have seen a move up to about, well, actually, it does have a little bit more than 1.272 expansion, and that expansion is really coming back. This is a daily chart we're looking at back here to the March 27 time frame. That high out there, 31.3417. The low that you're using for your expansion is the low of June 4th out there. So the 1.272 is 32.45. Ideally, on these 3 drives, you like to see 2 1.272 expansions. The second drive, really, the first drive was this move up here into March 28th. The second drive is ideally where you would have seen that 32.45, 1.272 expansion. It didn't give you that, but what this has given you is beautiful time. Take a look at this time here. That's the bottom I don't know what we'll call it, half ovals Of course, the bottom of my ovals here are cut off of the screen. But what you can see, this just simply is a time identifier. And so if we go from the time period from March 27th into the high that was put in here on September 21st, you will see that on March the 22nd out here, March 22nd, it actually made a high yesterday on March 25th is the exact time. So what you would want to be looking at on a 3 drive to a top pattern, when you get a breakout above those, it says that there is a strong continuation pattern that would be in place. Right now, the resistance on this is this, we'll go ahead and explode this up on the screen here, maybe make it a little bit easier for you to see. It's that bearish engulfing candle from the trading session of March 15th out there. So that sets up resistance, one level of resistance, the primary level of resistance that you need to be paying attention to at 32.60.62. You get a close above that. What you can also see is at 32.73, you've got a 1 to 1.272 A to B equals CD pattern that it would complete. So I would say close above 32.73, and that would be your real breakout of the composite. Let's go take a look at the, let's see, what would be next. How about the Russell 2000, because that has been, a show of strength out there in the marketplace. So let's go take a look at the Russell, see what it is doing, because it too has its bears. If you're wondering where the bears are hanging out, pretty easy to identify them on the charts, and that's why you've got some resistance up here. That's why you've got some tepidness as the market tries to move higher. You had a little evening star formation. Now, you're seeing the 1 to 1.272 A to B equals CD, which it has closed above. When you close above it, and you can see that you got Johnny Cash, and we're going to call it Basil Cash. How about that? Basil Cash out there, because it's walking that 9-period EMA. That's that blue little squiggly line on my screen out here. And when you're above a 1 to 1.272 A to B equals CD, well, it sets up the opportunity to run to the 1 to 1.618 level. That's at 983. It's quite a ways up there. It's another, 50 points or 45 points out there. And the Russell 2000 has worked off its bought condition just simply by moving sideways here. So you know that an overbought or oversold condition, it can work its way off by moving sideways, and that in essence is what the market has been doing. Yes, it has set up some bearish candles even in the Russell 2000. It's formed an evening star formation. That is a 3-candle pattern. It formed that beginning with March 14th. That was your first candle. Your second candle was that little small body on March the 15th, and then the next body on the 18th, closing at least halfway into the trading session from the 14th, setting up that evening star. That sets up the resistance line on the Russell 2000 out at 954 even. A close above that would certainly be a break of resistance, and that should then be an area that would hold as support. Now, it hasn't been tested. The low of that was tested here yesterday, and a close back below. Russell 2000 trading out 948.79. Let's see, what have we left out of this? Well, I don't think we've looked at the NDX. So let's go take a look at the NDX here, see if we can get that in here before the break. The NDX also has a area of resistance, so let's go take a look at that. Where is it on my stock chart here? Oh, there we go. There is the NDX 100, and the NDX says we take a look at this right now, trading out at 2802. It, too, has a little bearish engulfing candle right back here on March the 15th. Right now, you can see that area was rejected. It was tested yesterday. The line of resistance, let's call it 28.1205. You get a close above 28.1205, and the NDX would want to make a 100% move and get up to 28.78. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-4 441-6108 today to discuss. Your personal financial location does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC.
Launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Master Show. Dow's up 89 right now. Composite up 11. MasterCard, the leader in the clubhouse, up $10.44, up 2%. So let's check in on this stock, see what it's doing. It's running into a little evening star reversal formation that was created. The top of that being the resistance area being March 14th out there. That high is 531.25, trading at 530 right now. As it comes into that little swing point, that has 556,000 shares. So far in just under an hour of trading, 200,000 shares. So you got MasterCard here trying to break out for sure above that level. Let's go take a look at this on a 10-minute chart, see what kind of volume we've got behind here. Let's refresh our screen, get all of the data that I can. I see I'm running into just a little slight time delay here. Okay, let's also go ahead and put the relative weakness indicator up here. So we've got some decent volume. It's really been ever since the open here this morning, so it's not as if volume is dissipating inside MasterCard. I don't see any news on MasterCard. Maybe the news is on Visa. Let's go peek in on Visa and see what we've got on Visa. I don't see, news-wise, I don't see anything out there, so I'm not sure what the fire is underneath the underneath the price point here in MasterCard. Let's go pull up Visa as well, because I can see that is participating in this rally. You've got Visa up about 2% as well, the same percentage point. So oh boy, this is always a trick. In order for me to pull up one letter symbols, I got to come over to this quote page. I can do it. Oh, how about that? It worked out right away. So now let's go take a look at Visa, see what it is doing as well. That is now trading at 167.50. So let me pull this back here. Because Visa is up over its high. So Visa has broken out. If we take a look at Visa, we'd see the resistance would have been this bearish engulfing all the way back here on January 10th. So let's go ahead and put the line across the screen here. We'll go ahead and put that in black. We can see it actually broke out yesterday. Let's go take a look at the volume behind it. So it's Visa that is, it would appear to me to be pulling MasterCard up here right now. So we can see yesterday actually breaking out with volume. So you've got a new breakout going inside Visa. We'll go ahead and put this on a weekly chart and try to take a look at any A to B equals CD. But if you look at the real last time, there were some bearish reversal signals right down about in this area as well. It was really set up by this bearish engulfing up here on January 10th. But you also had a little bearish engulfing right down here. This one... let's see, right here on January the 17th. You also had a little bit of bearish candles, in this area right in here back in February of 2000, February 25th as well, but that's down a little bit too much. So we're just simply going to use the top of this swing point. That's better anyways. We can see it's broken out above that on volume. Now let's go try to figure out where this thing might be going. So let's put this on a weekly chart, because this has been a rocket ship. Really, this is the way you certainly like to see a chart. Now, you don't have any real major volume behind this thing on its move up. In fact, as we take a look at the daily chart, the last time there was any major volume was all the way back on May the 3rd out here. And that was at a price point of 122. It's at 157 right now. If for any reason this thing ever were to fall out of bed, that is the area that you would first be paying attention to inside Visa. But let's go put this on the weekly chart. As we put this on a weekly chart, we're going to just go to try to find the A to B equals. We already have it drawn in, so that makes it pretty easy out here. On the weekly chart, it also was breaking out above some bearish candles out here. You had a dark cloud cover candle. That's this one from the week of January 18th. That sets up your resistance as the high of January 11th. So the same thing really on the daily chart. That price point, 162.77. You had a bearish engulfing candle right here. That is on February the 1st out there. And then followed up with another dark cloud cover back here, March the 15th. So we can see, even on the weekly chart, a line of support out here that is broken out. We'll go ahead and put that line in black across the screen. And you want to do this, too, on any of the stock charts that you are trading, just so you can identify where the areas of support and resistance are. So in this case here, on the weekly chart, we're seeing a breakout. It's above the 1 to 1.618. That says the next level, 1 to 2, 175.95. Let's call it 176. That is where Visa is headed to. It's trading right now at 167.52. Also in the clubhouse on the way up, you've got Monsanto. That's up a nice 3%. MON is the ticker symbol. We'll take a look at that when we come back from the break. You got Apple trading a bit lower. It's off $2 this morning. Shutterfly, SFLY, they're down 4%. We'll take a look at Shutterfly and anything else that you'd like. 877-927-6648. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 102 right now. S&P's up about 9. Composite up 13. And let's go all the way out to Costa Rica to our man, K. Rico. K. Rico, thanks for calling. Thanks for holding. How are you this morning?
Hi, Steve. I'm having an internet problem, so if we get disconnected, I'm really sorry, but nice to talk to you.
Thank you. No problem.
I got something really on my mind about this Euro situation with this little country in Cyprus.
Yes.
My first question is, why would the Russians want to accept euros for their oil and gas that they supply Cyprus? If the euro is going to be steadily, they got to see the euro's going down, and the fact that this little these banks are confiscating the Russian mafia's money, for all I will put it as.
Sure.
They're not going to stand for that. What do you think?
Well, I think that, as we took a look yesterday, you had the U.S. dollar index. The U.S. dollar index have a huge move. and we know that oil is priced in dollars out there. And so certainly, and Russia is big in the oil business out here. And we saw where we saw metals pull back a bit. We saw light sweet crude, I think on the commodity side, probably had the largest move out there. So we're continuing to see a rise in light sweet crude, and I think it probably lends some credence to what it is that you're thinking out there. And it looks to me like right now the next level, just a normal retracement on light sweet crude is 96.30. It's at 95.58. But it looks to me like light sweet crude wants to make a run all the way back up to the top of this rising price channel that it's in, which says it could get to the $100 mark without any problem. So I don't know if if that helps. I don't know if there's anything tied together on that. But it is the one thing that I did notice yesterday was the rise in crude oil out there. So I don't know if they're linked or not. I think it's just a matter of, I guess the question would be, if we knew the answers to those questions, how would we trade it? What are your thoughts? Well, what is it? What could be the answers to the question, or what's the real question that you're asking?
Well, let me even go further. The real thought I have is all about the euro. And, for example, China holds $1 trillion or whatever. I'll just use a simple trillion in euro-denominated debt instruments.
Yes.
And Germany, I mean, these are the ones who started this boondoggle on Saturday morning, apparently. Did they really think about what the repercussions the repercussions of their actions? Because, I mean, who's going to pick up this mess, and who's going to pick up the tab? It's just going to continue. France will be next.
Well, you make one of the points that you make, and I was going to actually lead off with it on my 9 o'clock show, was just simply, the importance of words, because once you say something, you can't take it back, and in that case, we've seen that with regard to what's come out of Europe for the last 9-10 days or so out there. And, and even yesterday, I suppose, what spooked the market was that, this is really a template to resolve some of the other issues, whether it becomes Italy, Spain, wherever the next issue is that's going to pop up. We know that something's going to arise. The question becomes, how do you get out of the euro? Over in, it is pretty amazing that in Cyprus, just simply what's going on over there, and perhaps the inability to do business, putting off opening up the banks again till Thursday, all types of capital controls over there. I don't know that anybody was really thinking this one through. They could have easily done just an orderly reorganization. They could have gotten to the outcome of what they actually did yesterday right away, without totally spooking everybody, without at least without having a run on the banks as far as the small shareholders, bank holders, depositors would be out there. So, if we just pay attention to the stock charts, the euro, has broken through an area of support. There was, you could see, I could clearly see where the, where Super Mario and the Troika, the Trilateral Commission, if you will, of Europe, where, they were in, it looks like somebody was in supporting the euro, trying to hold that up. And now you've got the other side pushing. Well, who's pushing the other side? Maybe it's the Russians. But once that hammer candle gets broken, that sets up a run to 126.7 and most likely all the way down to 123.9. And that's got to have Uncle Ben and his team, on the trigger switch as well, and perhaps a little bit worried because you'll get a strong U.S. dollar. In fact, when we took a look at the U.S. dollar index chart itself on the weekly chart, what I was pointing out earlier, I think it was during the first show out here, and I'll put that back up on the screen. What I've got out here is it's formed a .786 Gartley sell pattern. It did that a couple weeks ago, Rico, and when it did that, it was also coming into a descending trend line. And one thing that I have learned about these butterfly patterns is that it's when a .786 fails, and what I mean by fails, it doesn't just get up there for one day, and it has to be an area that's been tested, and this area has been tested now for a couple weeks out here, and it's held. If it breaks above that level, not only will it move up to 84.25, but once it gets up into the 84.25 level, there's nothing stopping the dollar from moving all the way back up to the June 2010 highs out there. I mean, there's nothing stopping it. other than some central banks out there. So I don't know if that helps you. The question becomes, how do you trade it? So how would you trade that?
Well, I don't trade it at all, so I can't even begin to qualify to be the person to ask that question, to be honest with you.
Yeah.
But what I look at is, imagine the people over there who can't get their money out of the bank just for survival, normal routine of life. And, I mean, I equate it to the people in this country who the average individual works in a store, makes $1.95 an hour, and if they said you can't get your money out of a bank for 2 or 3 days, this place would be in chaos.
No question. I can't imagine it or believe it as well. But it's not really the first scare that they've had over there. So I don't know what the general public has been doing, whether they were, in essence, preparing for something like this. I remember back during the crisis of our markets moving down, from 2007 to 2009, when the money market got down below 1, when when there was an issue with regard to the FDIC, and and at that point in time, I remember being a concerned person and taking action and moving funds around just to make sure that I was inside the at least the insurance requirements that were out there, because the thing that is amazing is that you could have been I can see where just an individual who had retirement assets said, you know what I want to do? I want to just be in cash because cash would be safe. And they went and they didn't pay attention to the 100,000 euro, insurable aspect. It was a retirement funds. They felt that it was secure. And I can see them believing that by being in cash, they felt they were secure. And it's those folks that I really have feeling for,
Uh-huh.
And when they come on television, and I see commentators talking about, it was just the Russian oligarchs or what have you, and it didn't affect everybody else. Apparently, those are folks that never, ever, ever were an entrepreneur and ran a business. To have $100,000 in cash in a account as a business owner, you're not going to put it in stocks, as a small business owner. But to have those kind of funds, that's not a big deal. No way is that a big deal. When you take a look at payrolls, when you take a look at, if you were good at collecting receivables, when you just take a look at normal commerce, those people would get stung. So I think it affects. I think it impacts. And if it was only the Russian oligarchs or what have you, the banks would have been open today. They're not open today. They're maybe going to open Thursday.
I'm puzzled by why would somebody put money in a bank if there's no real, like the FDIC, insurance for a maximum or a minimum amount of protection.
Well, they did have a minimum protection over there, the 100,000 euros, which was equivalent to our 125,000 before they upped it to 250. So they did have that over there. But even with that being the case. Look, before I hooked up with Tom and started doing, some businesses with Tom in the radio or what have you, like I was running other businesses. We had way more than $100,000 in cash in our bank accounts. With one bank and one, and one banker, because of the relationships that we had. And I never thought about it. I never worried that it was over the, insurable FDIC amounts.
Right. Never
worried about it. Not for a second. Even though I knew that was the limitation. And, I'm not the smartest tool in the shed, but, I've been around. There was no reason for me to worry. But I do remember the day when I did. I do remember the day all of a sudden taking some serious action. I can picture, there are times in one's life where you can picture exactly where you were. Like for me, September 11th, I can remember exactly where I was and exactly what was going on, as most people can. I remember exactly when all of a sudden I was scared about having cash outside of the FDIC, and it was just a normal course of doing business. Without that cash, without having that insured, I wouldn't have been able to conduct my business. I wouldn't have been able to pay all my employees at Disney, Universal Studios, my suppliers, and everything. So, to answer your first question, no, I don't really think they really thought about what they were. I can't use the word on radio here to describe what they actually did, but it was pretty insane.
Yeah. As we speak, something's going on with the euro right now.
Yeah, no question. Look, it's still trying to test the support level on the euro. And I'll put it on it's really clear on the weekly chart, and that area was pinged during yesterday, and it is it's pretty simple. Hammer candles are beautiful candles because when you close below them, if you're long, you're wrong. But what that really means, though, is that means that you're going to go to the next level for sure. And that next level right now is down at the 126 level, and that area is under attack. And and it's going to be under attack for a while. And it's breaking through right now. Now it hasn't closed, but that is when we took a look at as the market was up 100 points, and as I was taking a look at who was moving the market, what was behind it, there was Visa and MasterCard that was breaking out, but not a whole lot of others that seemed to be participating, and the euro was relatively flat. So this is an area here where I still expect that we will see. We'll still see. In fact, if you were let's say a Russian, and you wanted to understand where is it that Super Mario is hanging out because you wanted to go ahead and convert your euros to dollars, you'd be looking at that hammer candle. You'd be looking at this area right now, and here's where the war would be going on. And you would keep selling into them to see if you would have a buyer, because you'd rather be doing it now than if it breaks through this level. Because if it breaks through this level, it's costing you more money. So right now, I think, if I were traded, if I were on their team, I would be saying, okay, we know exactly where the bulls are hanging out in this, and, let it rise a little bit, and then, boom, we sell into it. And just because here's where they're hanging out.
Fascinating.
Yeah. Well, that's actually the cool thing if you step back and you take a look at the power of these candlesticks, because it's really about just reading the message of the markets. And I use the term, that's where Super Mario and the Troika Group, whoever it is that's hanging out, I don't know who it is, but what I do know, it's where people took some bullish bets yesterday. It's truly where the bulls had stepped in, or last week, I should say, when they formed that hammer candle. And you can just go back and study those candles, both from they're great candles to be able to take long positions when you see them. And they're great also because you know when you're going to be stopped out. I mean, it's so very clear. So I don't know whether this area will break or not. Should be a strong area of support. But if I were on the other side of the trade, knowing where they're hanging out, you would go ahead and sell into them. So we'll see how it all plays out.
I just got to say this in closing. I'm glad that I'm at the age where I'm at. I know what I know. I've learned from my mistakes. I'm learning all the time. I don't know about the young children of the day, what their futures are going to be like. Maybe people said this 40 years ago when I was a young guy and they were older, and they'd say, I'd never want to be, young again with all the crazy world that's going on. Maybe things
I don't know,
will
but
work out.
Yeah, but don't you certainly you remember as clear as day, the hostage crisis, when gold moved up to $600, $700 an ounce. Silver was, you forget the Hunt brothers or what have you. But I would have to say that things were a little crazy back then too. And, and we came out of that okay. So I think we come out of these things okay. How does it play out? Look, it's an accounting question. The way that the debt ends up being paid off is going to be through revenue growth, through putting people back to work. What those industries are, I
just want to premise. I'm in my middle 60s, but I feel like I'm in my middle 30s. So I'm good for another 35 years in life. I'm just sitting back with a better position than I could have been. I'm blessed. I feel very good, a little dangerous. Sometimes things are hairy, but I feel this is going to be a very exciting another 25 years, 30 years.
Well, I look forward to speaking to you at TFNN for the next 35 years as well, my friend, all right?
And face-to-face one day.
All right, you got it. 877-927-6648. That was K. Rico in Costa Rica. Right now, you've got the Dow's up at 80. S&P is up 6. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary that it does have. Take a look at, coming off of the lows here, the lows I'm referring to are the swing point that came in at 5 p.m. on February 25th. The retracement from that swing point low to the high out here that came in about 8 o'clock at night on March the 11th. You can see that first retracement down was a 0.382 retracement. Look at that, 0.382 retracement. That was your B point of an A to B equals CD down. That is forming. Take a look at the retracement off of the high now, off of your B to C retracement. That was a 0.786 retracement. You got to like that. Take a look at where I'm projecting this to come in, a 0.618 Gartley buy. Take a look at the expansion of your B to C leg here, giving you your D point, 1.618. Boy, that is, if that comes in, you've got everything that you need right around $93.11. That would be a nice buy. The only thing that you're missing, would be some type of reversal signal there, because if this area fails, it'll fail. You want to wait for bulls to be able to show up. Well, that's what this hammer candle was, this B point out here. So I'll blow this up on my screen. That's this little session right here from 3 a.m. on March the 18th. That's your hammer candle. Once that was broken, that should have been an area of support. An old area of support becomes resistance. If we take a look at where the Japanese yen is traveling to right now, it has that resistance line. Used to be old support. It was tested right back here at around 7 o'clock in the morning on the 22nd. So that's now this little red line going across the screen. We also have this wide-ranging body that was coming down yesterday at 1 o'clock. And as that was coming down, you can see price really hasn't traveled much outside of that. So that still is a little bit bearish for me. Says that this pattern can still set up out here. And so that is on the 60-minute chart. I also want to see as this pattern is forming, I want to see it get down into the oversold territory of that RSI. That would set up a nice buy. I don't know if the trade will work out, but it is a pattern that would be worth taking the trade on if, in fact, that pans out. So that would be a Gartley buy inside the U.S. dollar Japanese yen. That is on the 60-minute chart. You can see that on the 30-minute chart as well, maybe even 120-minute. If we go back, we were talking with Kay Rico about being able to identify those hammer candles, being able to identify where the bulls are hanging out. You want to be able to use that. Well, and inside the euro, I don't know who it is that's out there that's buying the euros. I can only speculate. I don't really need to speculate. All I need to do is just understand where it is that the bulls are hanging out. And then on a intraday chart, because I know that's the weekly chart that we're looking at, it's on the intraday chart. Just go down there and watch the battle. Well, take a look. Each time that the bulls try to break that hammer low, or the bears try to break that hammer low, the bulls step in. Right here at 1:30 in the afternoon yesterday, you had a little piercing candle that formed right here. That was your first sign of bulls. We weren't able to really, it's been consolidating, and we can draw the consolidation range. I might as well do that across the screen so we can see a very narrow-banded consolidation range. Let's put that in the black across the screen out here. But as you take a look at just simply, I want to look at price behavior as the market is moving down right here, this candle right here at 4:20 this morning as the euro was pushed down. The bulls showed right up. The bulls showed up. They formed another piercing candle out here. Right now, we don't have this trading session. Doesn't close here for 2 more minutes, but right now it's formed a bullish engulfing candle right here. So we know where somebody, whoever it is that's supporting the euro, where they're hanging out. We'll see who's going to win that battle, the bulls or the bears. Right now, stay tuned for Basil Chapman. He's up next. Have a great Tuesday, folks. Look forward to seeing you tomorrow. Take care.